Pfizer might be the best high dividend yield stock to buy right now. They just announced that their vaccine trials are remaining on track. They have not seen any safety issues that are going to cause them to pause the trials, and this is great news as over the next few weeks, we are expecting some nice clinical results from this trial. So of course we know the pandemic has caused great havoc across the world, and Pfizer, with their partnership with BioNTech, is one of the companies trying to compete to get a vaccine to market to of course help save people's lives and overall grow the business through of course the generation of revenue that will come in from all across the world. So this partnership is working together to get a vaccine done, and we just got a report saying that Pfizer and BioNTech vaccine trials remain on track and we should be expecting results over the next few weeks. This is great news for both companies as there are other major brands such as Johnson & Johnson who actually had to pause their vaccine trials because of some safety concerns. So the fact that these two companies and their partnership for this vaccine are progressing as expected is great news. So their actual vaccine is only experiencing the normal side effects that you would see from any young vaccine during the trial stage, and these two companies believe they will continue on and give final results over the next few weeks. So Pfizer is a mega cap healthcare company under ticker symbol PFE that currently trades at a $204 billion market cap. They have a dividend yield of over 4% and are actually trading flat over the past 12 months. Their partner, BioNTech, ticker symbol BNTX, has seen a rapid surge and is up over 581% in the past 12 months, but this is a much smaller company that only has a market cap of $20 billion and does not pay out a dividend. So in this video today, we're going to talk about Pfizer and BioNTech and discuss if Pfizer may be the best dividend company to buy right now to lock in that 4% dividend yield with this potential to grow because of the positivity with their trials. We also have some news that this company has the potential with this partnership to have 100 million doses of the vaccine by year end. So we have some great news coming from this partnership, which of course helps in investor confidence in Pfizer. So in this video today, we're going to talk about Pfizer, go over their expected growth numbers moving forward, talk about their current valuation and if now is a great time to buy in, and discuss their financial statements and their future outlook overall for the company. So thank you for tuning in, everyone. As you know, I am the Gen Z investor, and every single day we talk about the stock market. We go over different stocks you can buy and sell within your portfolio. And in this video, we're focusing on the mega cap, high dividend yield healthcare company, Pfizer, with this stock analysis. So they are up only 1.5% over the past 12 months, with that market cap of over $200 billion and trading close to the middle on the 52-week range. So this company is not very volatile, and they currently spot a dividend of over 4%. So we're going to go over some price evaluations for the company and determine where we believe the fair value is for the stock and some price targets for the share price over the next 12 months. Their partnership in the vaccine deal, BioNTech, is a growth stock that has been on fire, and some investors may prefer this company over Pfizer, but for me personally, this company is too young and too small for me. If we take a look at their market cap, they're sitting at over $20 billion. And if we take a look at their income statement, in the past 12 months, they've only brought in $141 million of total revenue. So a company bringing in $141 million of total revenue with a net loss of over $250 million does not support a $20 billion market cap. So I believe this company is a little bit more high risk than Pfizer, a little too volatile for my personal liking, and I believe considering they are both partners in this deal, Pfizer is the healthcare giant that currently pays a nice yield and is more diversified away from just the hopes of this vaccine. I believe they might be a better pick within a portfolio for a nice total return that includes dividend yield and some share price appreciation if their vaccine can hit the market and boost investor confidence. So right now we're going to take a look at Simply Wall Street, which actually represents a 40% undervalued in current share price for Pfizer. They believe Pfizer has a fair value of over $60 a share, and when it's currently being traded at around $36, it is 40% undervalued. So of course that is a huge fair value price target for Pfizer right now, but that's only the first analyst report. If we take a look at a Morningstar report as well, they give Pfizer a 4-star rating, which means it's undervalued. If we take a look, they have Pfizer being traded at around an 8% discount right now. So we have two different sets of analysts who, although they have varying opinions on what the fair value of Pfizer is, they both conclude that Pfizer is actually undervalued right now by a range of at least 8%. So getting into a massive company that is undervalued at this current price point might be a great sign. Seeing companies that are large mega cap brands that continue to generate nice net income each and every year and contribute a nice growing dividend, getting them at a fair or undervalued price point is always a nice thing to do. We're going to take a look. They have a price target from analysts, from a group of 15 different analysts. The average price target sees Pfizer at over $41 a share in the next 12 months, which is around a 12% current upside from the share price today. So we're seeing a 12% potential gain in share price tied along with the 4% dividend if this company can reach analyst expectations. We're also going to jump into Pfizer's most recent quarterly report. The last quarter that they've reported, of course, has been some tough times. We're going through a global pandemic, and a lot of the economy has been shut down. People are staying at home, not spending money, and overall, a lot of businesses across every sector of the market are shutting their doors forever. But Pfizer actually reported some strong numbers. We're taking a look. This is directly from their latest quarter's financial presentation, and you can see here in the bottom, they raised total company revenue and adjusted diluted earnings per share guidance ranges. They increased the ranges. And then, of course, they raised Pfizer's revenue and adjusted diluted earnings per share guidance ranges again. So you can take a look. Their current guidance sees revenue at over 40.8 to around 42.4, and they actually bumped that up from 42.3. So a slight bump up, but they actually reaffirmed and slightly raised their revenue guidance to end of the year, which is a good sign. A lot of companies right now are lowering their guidance, returning back to where like a previous guidance was, not increasing any numbers, but Pfizer, when they reevaluated during this latest quarter, they showed an increase. And same thing for earnings per share, they show a 3% increase from their previous guidance levels. And a lot of companies have also stopped giving out guidance once and for all, but this company continues to hold strong with their 2020 estimates. So this company has a current dividend yield at over 4%. We went through Pfizer, the kind of news headline that's as of late that their vaccine is going well. Looked at, we saw that they may be undervalued at this price point and may close out the year very strong by raising up their most recent guidance. So if you jump in today, you're locking in a 4.12% starting yield. They pay out around 53.5% of their earnings, which is very sustainable. It gives them room to grow the business and grow the dividend over the next few years. And they've been growing their dividend at a rate of over 6.7% averaged over the past 5 years, which is absolutely incredible. A very strong dividend growth rate tied along with a high starting dividend yield. And they have a dividend safety score of 75, just showing that this dividend is growing at a nice rate each and every year and is considered safe. We're also going to end it off by taking a look at their financial statements. Total revenue has been on a slight upward trend over the past few years, but as of late, it has seen a slight decline. So of course, the past 12 months is a global pandemic, and we have seen a decline in total revenue numbers, but it isn't too bad for a company like Pfizer. Revenue has been on the decline, but this is a company that is nicely diversified, that believes their total revenue numbers will bounce back, and of course, the vaccine is just one potential extra stream of revenue when it comes out if they are the first to market. And if we take a look, so they average around $50 billion of revenue per year, not a ton of revenue growth year over year, which is kind of matched in when we took a look at the share price that is very flat over the past year. Investors aren't expecting any rapid increase in revenue because this is a massive mega cap brand. And they do bring in billions and billions of dollars net income each and every year. In the past 12 months, $14 billion of net income, which is some nice margins to see. Pfizer's balance sheet as well is on the kind of an upward trajectory. If we take a look, once it loads up, this company has a nice amount of total current assets on hand. Before we take a look, you can see net income numbers are varying year to year, but overall, the long-term trend in net income 5 years ago was around $7 billion, all the way up to around $14 billion where it is today. Although we have seen a decline over the past year, net income numbers are trending upwards. They have a lot of total current assets on hand as well. They have around $46 billion of total current assets, which is huge, compared to total current liabilities of $32 billion. So they have more total assets and total current liabilities. They have that current ratio above 1, which as of right now is sustainable. Of course, you like to see companies bump that up to at least a 1.5, but as of right now, Pfizer's short-term financial position shouldn't be in too much hardship. They have total assets of $177 billion compared to total liabilities of $113 billion. So overall, a nice total ratio once again. And if we take a look at equity, we want to see equity growing over a long term. And Pfizer, similar to their revenue, total equity has been somewhat flat around that $63 billion range over the past few years. So that's one new thing Pfizer is going to have to work on. So taking a look at their financial statements, not the strongest by any means, but I don't believe they're in any hardship over the short term or even on a 3 to 5 year % basis. I just think this company, of course, needs to improve. They got to get revenue numbers up. If they can bring their revenue back trending upwards at a faster rate, hopefully they can tie in some growth in net income with that as well. But this new news that the vaccine is working and has a potential to grow the company, I believe is going to be huge. And not only for the vaccine. I believe if Pfizer can be one of the first companies to get a vaccine with BioNTech through this partnership out on the market, I just think that expands the brand into new markets that they aren't already operating in. If they can be the one company in the partnership to actually get this as a global, hopefully across the entire world problem solving for this pandemic, I believe it's going to expand their market for all their other products and vaccines even further and allow them to grow the business over a longer term period because of this current progress with this trial. So this is a nice company to take a look at right now. I think Pfizer is a solid brand. I never make financial recommendations on this channel. Everyone has to do their own research when picking individual stocks. But for me, I hold Pfizer in my personal portfolio. I like the company, and I like that it's still only flat over the past 12 months. We've seen a big run up in the market as of late, and a lot of companies are being traded overvalued by a lot right now. We're seeing some crazy multiples. Pfizer's got a forward PE of just under 13. I just think this company at their current financial position, with the current news that other companies are having issues with the trials and are being forced to stop, and Pfizer isn't going through any of those issues right now and is actually being somewhat successful with their trials, I just think this is a nice company to hold right now. There's so much volatility. If you want to bolster some dividend income, which is hard to find nowadays, you can get into a 4% dividend that is growing each and every year from a company with a safe paying dividend that I believe is sustainable over a longer term as well. So a nice, interesting brand to take a look at. This was just a quick little analysis into Pfizer. I'm the Gen Z Investor. Please hit the like button and subscribe, and I'll see you in tomorrow's video.